All right. Good evening, everyone. If you can hear me, please let me know. Want to welcome everyone to the Hurley Investments Market View Commentary for January 30th. We are through another month. Unbelievable how quickly we're getting through everything. And pretty neat to have a couple of you here tonight. Jim, glad to see you. Russ, good. Abraham, thank you. William, always welcome to have you here. Maud, good to see that you're back. And RJ, haven't seen you in a while. And I'm going to use a little bit about what you're telling me per your request. No one knows who you are. They're going to get a hold of you. So with your permission, I'm going to wait for you to type something in. I'm going to use a little bit of your example tonight, if that's okay. All right. First thing that's going on, let's talk our market. What's going on right now? Someone tell me, if you're looking at our market, huge down day, gave up basically 25% of the gains today for the month. What's happening in our market right now? I know some of you are going, well, Kevin, we come here to watch these so you can tell us. I want to know what's going on in our market. That is funny. Waiting for the Fed, waiting for Fed, waiting for Fed, Fed FOMC meeting, Fed rate hike, and the Fed, welcome to earnings, and the Fed. So, FOMC meeting tomorrow and Wednesday, right? Wednesday. So, really quickly, market expects what? Market expects, anyone know? 25, there we go, 25 basis point rate hike. So here's what I'm going to ask you. Why? Can someone please tell me, why are we expecting a 25 basis point rate hike? And obviously no one knows what it's going to be here in the future. I just want to ask you, why? Why are we expecting a 25 point rate hike? So Maud actually said it pretty good. I'm just going to copy it. Economy. Come on, just spell the right way. Economy slowing down and inflation still present. Okay, so I'm going to go off of that. Russ, you typed it in, and William, you typed in something. I'm going to hit those in a second because I like both of them. Why would he not do a 50-point rate hike? We did 4 75-point rate hikes. We did 1 50-point rate hike. Why would we not continue the 50 basis point rate hike? Hard, painful landing. Well, okay, but we should have a higher basis point rate hike if we want to avoid a hard, painful landing. So I'm going to go back to what William said. And Russ here, William said, because people are idiots. Russ said, because the media said so. We already know that he's going to be attacking inflation. Bullard on CNBC basically said, I wouldn't be surprised with a 50-point rate hike. We know that they want to control inflation and it's starting to come down now, but it's still at an elevated rate. It's not like it's gone away or reversed. It's just at a higher rate right now. Mod just typed in because people are idiots. And RJ says, because they want the market to crash. Here's what I'm trying to say. And I'm going to put it all in capital letters, right? Don't be surprised with a 50 basis point rate hike. Just don't be. There's no basis right now after 4 75-point rate hikes. I would tell you expect 4 50-point basis rate hikes. He has said he's not going to make the same mistake Volcker made. He's not going to go too slow on the way up. He's not going to pull it off too fast. If you think about it, we had a quarter point, 475s put us at 3 1/4. We then had a 50, right? So we're at a quarter point. We had 3 going in there, so that's 3 1/4, 50. We're only at 3.75, which means on the market for ourselves, we're at 4 to 4 1/4, right? I could easily see us being at 6%. If you think about it, remember when treasuries were at 6% with $1 million, you could retire at $60,000 a year with a 6% 30-year annual treasury? I'm shocked that the market built in 25 basis points and thinks that's where we're going to be. When we hit 50 and people act surprised, I'm going to giggle. And when we hit 50 again in March, I'm going to giggle. 6% is not a huge, super high interest rate. Welcome to the painful learning of, hey, we have interest rates too high. It doesn't make sense. A bunch of you are typing stuff in. In fact, it's kind of blowing up. Mod had a funny one here. He's going to make new mistakes. And the second one, which I think is even catchier, right? When can we count on the Fed to do anything right? Is that what you said there, William? It's shocking. It truly is shocking where things have gone and what we're looking at. And it's just, for lack of a better term, they started too late and they're compounding the problem by moving too soon. And it's just one stupid thing after another that makes you scratch your head and go, huh. Things that make you go, and this is one of them, right? This is one of them that you just, I can't believe what's going on, but at the same time, it doesn't surprise me. Very interesting. Both of you are thinking along the same lines. I bought my first house at 8.5% mortgage. I've paid a mortgage rate of interest over 10% in the past. There's two of you that are just thinking along those same lines. So don't forget, and don't be surprised if it's higher. Now, a couple of you made the comment, okay, Kevin, so let's talk about that really quick. Let's talk about recession again. We had 2 quarters of positive GDP, which means technically we're out of recession, right? With that said, I'm not sure I'm going to see a positive GDP number here in January. And I found a really interesting article. If you guys, well, when you guys go back and look at these notes that we post, dun, 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 dun. What is a rolling recession and how does it affect consumers? So here we have a little interesting comment that I thought was pretty, it was shocking, right? By most measures, the U.S. economy is in solid shape. The first half of 2022 had negative growth, strong labor market, and a resilient consumer helped turn things around and give hope for the year ahead. Now, this is actually just, this right here is just an ad, right? I kept it in there though. A further stock rally will be like bathing in lava for market bears, Bank of America says. But here's what we're looking at that's just something you got to keep in mind, right? Gross domestic product, which tracks the overall health of the economy, rose more than expected in the fourth quarter. And the Federal Reserve is widely expected to announce a more modest rate hike in next week's policy meeting as inflation starts to ease. Well, PCE prices really didn't ease. It's still at elevated levels, right? Still, some portions of the economy, such as housing, manufacturing, and corporate profits, have shown signs of a slowdown, and a wave of recent layoffs fuels fears that a recession still looms. And that comes to a rolling recession is already in the way. Rather than an abrupt contraction, Americans need to brace for a rolling recession is already in progress, according to Sung Wong Song, right? Professor of Finance and Economics. This means the parts economy may take turns suffering rather than simultaneously, or we might go through 2 more quarters where we're back in a recessionary state, but as it logs that in June, the back half of the year should be positive. And it may be this way through 2024 as well. It's just interesting as you look at what's happening. There are going to be certain parts of the economy that will be affected. If you told me right now, actually, let's see what right now is in a bullish market. And I'm thinking in terms of a couple sectors, right? What right now is in a raging bullish market? And we get a couple of you typing some things in. So energy would be a good guess, but we just have natural gas that's at an all-time low, and we have electricity that's down, and we had Chevron that didn't do a good earnings even with the higher prices. So a couple things there you might want to think about. I love that one. I have technology, right? Tech and smoking. Another one of you said drinking wildly. Technology is doing pretty good. Someone's going to say, well, Kevin, I'm going to somewhat disagree with you. And that actually is pretty fair. But if you look at, no, you can't look at crypto and call that a raging bull market. But how would you say it? I'm just going to put it as metals. And really, it's from 2020 through 2022. Silver's higher, gold's higher. Gold had a really good 1920 and up. Excuse me, 2019 through 2020 and up. So that's where we've had some interesting opportunities in primarily those two areas. And we could put smoking and drinking in there as well. I completely agree with that. There is that answer, and we'll go to that and obviously work on it. So the short answer is you're going to have to be looking for some of those sectors or individual stocks where, once again, sector or stock picking is important in a fair valued 18 times earnings S&P 500. And that's where we're looking at what's a deal, right? So it's kind of playing what's the deal game. And so this is where we're going to kind of vote on it, right? Is Apple a deal? Richest company, all the cash on hand, recession proof. Is Apple a deal? Kinda, right? Baidu, trading at a value stock market earnings. Is Baidu a deal, right? Boeing, off over 50% from its highs with what, a $56 billion order for 200 planes that came in. Bank of America moved away from mortgages. $55, an all-time high, trading at 35, right? Could it be a deal? Disney traded at 208. Billion-dollar movies coming back out. Parks opening up, trading at 107.60. This one is for Bill Branner. Ford, number one truck maker for 46 years, didn't take any bailout Didn't have all its stock go under, so it had no more obligations to its stockholders. Didn't ruin people's pension funds and retirements. Traded as high as 25.86, 87 a while back, where it's fully valued, trading at $12.90. Well, Kevin, it's lowering its price on its electric Mach-E's. Again, with all due respect, electric cars are kind of pieces of crap right now, minus Tesla. But still, brother has the newest version of Tesla. To think it really goes 280 miles, come on, people. It goes 280 miles with using no AC, no radio, downhill the whole freaking way. It can't get through a day of work in the AC stuck in LA traffic. We were late to our Raiders Chargers game on a full charge that night by the time he got to me because of traffic and sitting in traffic for 2 hours. Just things to think about. We can put some more in here that we're looking at. I would not consider Google. Some of you have mentioned Google. I would not put that in there right now. I would put JP Morgan. Severely undervalued. Coke. Definitely undervalued. Lockheed Martin, I would say, is undervalued. Micron, all the chip money it's going to get, undervalued. I hate to say this, but Nvidia, severely undervalued right now. I want to put Square in there, but small business going to a recession, probably not a good one to put in there. Someone asked about Target because it's so much better than Walmart. I probably would only put one retail stock in there right now, if not two, and for completely different reasons, but I might as well mention them, right? Lululemon, because I'm just going to say the rich, and that's not fair to say, but it's a unique niche market where people will spend it. On the low end, you got Under Armour. Same thing. I'm kind of teasing right here, but someone just let me know Tesla caught fire in California and took 6,000 gallon water to extinguish. I'm going to tell you that Elon Musk lit it on fire himself so he could get rid of his building, get his insurance payment on it. As you know, he's trying to get the hell out of California for a reason, right? So wouldn't surprise me if they did it themselves. So it's interesting because right now, and I'm going to say right now and through 2023, look for undervalued opportunities. And something to think about when I'm saying opportunities here, I would just say in 2020, we went through, can't type it all, that dang key is still stuck. In 2020, we went through a 5-month, 20% stealth. Bear market. It hit it, came above it that same day, and off we went. It was a great year for us, right? For those that were in the year before, went through it, made my way down, came back up. By May, we were back to break even. Great year, added shares. We killed it. 35 to 68% returns on a 16 or 14.6% market, actually. Right now, we are in the same cycle, but it will take 2 or 3 years. We kind of went through it the second half of 2021. We're through it here in 2022. We might be through it the first 6 months, and then we see our rebound the last 6 months. This could very easily be a 40 to 60% return year on some of these things that have come back because we've added shares. That exponential return, the exponential returns, can't type, returns happen with adding shares and having stocks fall horribly. So the short answer is what I'm trying to say, right? You've taken the pain already. Now let's get the rewards. And that's what we're looking at. And we're still looking at it more towards the end of the year, but some of us have had some really nice runs in our accounts on just a, 3.85 market right now. After today's move, our market's only up, where is it? Market's only up for the month. Well, actually, they're saying it's 4.64 after being down 1.3. So 4.64, there's some accounts that have double that return in this month. And it's because some of our stocks are moving higher. Something to keep in mind, right? Big earnings week this week. And when I say big, wow, we've got some monster earnings. Caterpillar, ExxonMobil, General Motors, International Paper, McDonald's, which should be MCD, right? Is McDonald's. Pfizer, UPS, AMD, Amgen, Electronic Arts, Western Digital Company, Altria, Boston Scientific, Humana, T-Mobile, not Walmart, Waste Management, Allstate, eBay, Meta on Wednesday, Amazon, Baba, ConocoPhillips, Eli Lilly, EL, Estee Lauder, Granger, Harley, Hershey, Honeywell, ICE, Merck, Beazer Homes, Google, Apple, Clorox, Qualcomm, US Steel, Ford, Cigna. We've got a ton of opportunities coming up here in this week. For us, we're looking at Meta on Wednesday. We have Google, Apple, Ford on Thursday. Next week, we're going to run into Disney, Under Armour. A couple weeks later, we got Baidu. We've got some significant opportunities coming up. And so we're getting ready for it. I do think we're going to have a pretty down day tomorrow. I said we're going to be up 2%, which means we're going to lose 2.5% tomorrow. I'm probably going to be off. I should probably change that to like 3.5%. We'll probably lose 1% tomorrow. Kevin, why are you so negative? Well, technically we're still bullish on the Dow, but we can't get above the overbought. So we're going to build a base, or we're going to fall, and we're going to come back down. It wouldn't surprise me. Dow Jones Global XL cover 3. It wouldn't surprise me. This is not our Dow though. Why is that not got the wrong one in here. So let's find the DJI, right? Huh. What am I doing wrong? Why did I not have it here like I always have it? And geez, come on, Hurley, you know that one. Sorry, guys. That was just me not being smart. I knew it. Got to get the right stuff in there, right? Giving you guys bad charts. You're going, Kevin, you got to understand what this is all about. Let me get it one more time. Gonna say it didn't look like what I prepped for. So here we go one more time. My notes weren't matching what my chart was showing. That's because I did not have the right chart. If I don't have the right chart, my notes are not going to match up. Okay, so what I was trying to say is we are showing weakness, and my notes were showing weakness, that the Dow Jones Industrial Average is just trying to hold on to the 50-day. It literally almost stopped right on it today before it went just a smidget higher. But the 50-day sits at 33,632.77. We finished at 33,717.09. So can I expect us to lose 80 more points tomorrow, if not fall through that 50-day? Definitely. Yes, we're technically still bullish, but we're going to retest that 50-day. It would not surprise me if in the next week we were down at 32,347 testing the 200-day. In fact, we could be there this week if we get a 50 basis point rate hike, right? We're holding on to 4,000. We're fighting it. We've been fighting it for the last 6 days. 3 days to get above it, 3 days to stay above it and come and test it. We couldn't hold our resistance level. It's a downward trend. We do have the 50-day trying to cross above the 200-day. That is the golden cross. You can see the red line come down to test the blue line. I don't mean to be so negative, but my expectations will probably be back around 3,800 relatively quickly here. I do think there can be some winners, but yes, I think we're relatively quickly going to be down at that 3,800, retesting a support level. The reason why, pretty simple. 1, 2, 3. On a chart pattern, what did we just do on the S&P 500? Anyone know what that's called? Where 3 times you hit up there at that 4,100 level? Anyone know what that's called? 3 strikes and you're out? No, but yes, William. Triple top. We have hit a triple top. It is resistance. It's a pretty famous chart pattern, probably coming back down to test that 38.50 and to fight this support and or base that we built here in December. And notice I'm kind of going, well, because I can't draw with beans, right? But it's in that range that we're probably coming down to test because we have 1, 2, 3 very easy triple tops, all at 4,100. This one didn't quite get there before it reversed itself, but we're right there. Pretty easy triple top chart pattern, probably heading down lower. NASDAQ, it spent 1 day above the 200-day. No triple top here. In fact, you have higher highs and higher lows. Again, Fed has not been our friend. You don't fight the Fed. It would not surprise me if we're down testing the 50-day because of the 50-point basis hike. And I don't see the Fed reversing course or changing anything. Average work week on Friday, really, it's all the AMC and the FOMC meeting. Wednesday is where it matters most. FOMC rate hike. If we're 25 basis points, we have a chance. If it's not, our market's going to come down crashing and it's not going to be helpful. So how am I looking to trade? We mostly have stocks protected. Protective puts, full callers. We have added a couple leaps for Boeing, Baidu, and JP Morgan. We will look to buy in tomorrow, if not on Wednesday, to a couple companies. And we also added SPY puts for the rate hike. So we've already got some SPY puts for a little extra to make on the way down for Wednesday. Added them today. They'll be allocated into your accounts. Need a trade if you happen to do the JetBlue trade. Get out Wednesday. Pending, right? Rate. Man, I wish that freaking button would work. After the rate hike announcement. 25 basis points, you can start to pull protection off for those companies who have already had good earnings. I put an interesting article here. It came out today. It was really a big one, but an interesting article all about what's happening this week. Rolling recession I have in here for you. Intel's horrible quarter. A lot of you asked about Intel. I haven't been in them for a couple of years, but it really is so poorly run right now. There's huge trouble for Intel. It's not a deal. A couple of you asked me at 50 if it was a deal. It's definitely not a deal, and it's not a deal down here at 20 either. Kevin, it's traded at 150, blah, 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 blah. When company sales are down, profits down, gross margins down, outlooks down, it's a loser stock. And it's not looking to rebound anytime soon. You might see Intel be a single digit stock price here in the near future. Then it might be a screaming buy, but it's not right now. And I found Self-Made Millionaire. These three traits separate highly successful people from everyone else at work. And I just found it, I think it goes along with the stock market: optimism, emotional intelligence, and perseverance. All three of those are what it takes to run these cycles in the market. With that said, any questions that you guys have that I can help answer for you today? Any questions you guys have that I could possibly answer for you today? So yes, RJ, in fact, a couple people dropped out, so why don't I go ahead and say it? Last year, RJ went through a 64% decline in a traditional 60-40, traditional 60-40 a modeled portfolio. And RJ's comment to me was, Kevin, I didn't get anything for it. You know, I wasn't adding shares. I wasn't doing what you're doing. I didn't get anything for it. And RJ's question to me was, is it worth the single stock risk investing versus a 60-40 model, right? And RJ, is that the best way to say it? I'm gonna give me a second here to see if RJ responds. Is that the best way to say it? I think you're asking me, is a single stock investment like we're doing better than a 60-40 traditional modeled portfolio? And the reason why we're saying that is because understand a 60-40 has 60% in stocks anyway. And it's diversification. Diversification has never helped anyone out in a stock market crash. Thank you, RJ. The bonds are at an all-time high. The writing was on the wall. It's amazing how people are losing. Out of that 40%, they're losing 36, 90%. Is that fair to say? In fact, does that add up? 36 and 24? Although actually it was 28% loss on a 20% S&P market. So the short answer is you can be diversified on a 60-40 traditional model, lose 90% of your bonds because of the roaring interest rate hikes, which comes out to a 36% loss on your overall portfolio there, lose another 28% on a highly diversified mutual fund in a 20% down market, and what you're given is a 60% loss, although those numbers are adding up to 64, right? 28, 60, which is what you had, 64% loss, and nothing was made up on the way down. No extra shares were added to your portfolio. And you're asking me if it's worth it. Well, Warren Buffett, who is, in my belief, is the most successful investor. You can argue with me, and that's who I'm basing my studies and the work that I do. It's worked for Warren Buffett. And yes, Warren Buffett uses options and warrants a little bit differently than we do, but much in the same way. If you ask me if it's worth it, yes. Has it been worth it over the last 2 years? Yes, we've added shares. We've been in a bearish market. We just need to have that perseverance to have it turn. Was it easier in 2020 for that first 5 months? Of course it was. Down 20%, up 20% in less than 5 months. It was awesome. But this is where it's at. You'll never beat the market being in the market with a fee. You'll never beat the market being in a pseudo fund that replicates the market. You've got to find those that have these explosive returns in them. And it takes hours. It's what I spend all of basically my Christmas break doing. I go through hundreds, if not almost, that's not true. Almost 1,000 stocks, not over 1,000, but almost 1,000 stocks I worked numbers on. The ones that are talked about, I just build sheets of stocks that are good opportunities. And I crunch the numbers all during my Christmas vacation. It's the busiest time of the year for me. And I'm looking for new opportunities. But it surprises me how there's not a whole lot of new opportunities in positions that are not fundamentally sound. And that's where if you ask me if it's better, if it was, my own money would be in it too. My own money would be in it. I've had to drain one of my accounts, a $70,000 one, for bills for Jared that just weren't there. I'm dipping into the $260,000 for retirement. It's what I got to do. Bills are being paid for a son who made a poor choice, and it's affecting me. I really need to keep as much in as possible for the rebound, and that rebound's coming. It's just the cycles, and it's where those cycles you just can't predict. Going back to it, and if I can mention a little bit on your experience, artificial intelligence. To truly think that you can predict the future with it, it's just not there. You can't predict the future. As much as human tendencies and kid tendencies, the market's more complex. Past history never guarantees future results, and we just got to keep that in mind. So hopefully those questions are answered. Are there any other questions? And a couple things came in, so let me go ahead and read those in. The problem is not the 60-40, is to have an exit plan which will depend on technical analysis and sometimes also on fundamentals. Actually, 60-40 is 100% based on fundamentals, and it still never beats the S&P 500 except in a down year. So you actually have built a model for that. It used to be 1.44 years. It actually has been for 13 years since our last stock market crash, which ended in 2009. So it's been a model for 13 years that beats the S&P on a down year, and 12 years of up years on S&P it doesn't. So the model's flawed. It's like driving. You can drive straight. At some point, you have to need to make a right or left. I agree with that exactly. And you can't match the market using the market when you add in all the fees that are in the mutual funds. William, I 100% agree with you. In fact, Mary, are you here today? Mary, it's probably the Thanksgiving of last year. I'm just going to share what you made your comment there, Mary. And I'll paraphrase it. If I don't say it correctly, let me know. All right. Mary's comments and I believe this was your husband's portfolio. Mary's comments were, you can't make money in a market with a broker that doesn't give a shit. And when they're all just thrown into stuff, they're not looking at accounts or positions every day. I'm shocked that you're paying management fees and commissions. And I kind of giggle at, it's not T. Rowe Price, what's his name? The guy that says, we don't work on fees or commissions. And their employees don't, but the company does. The company gets Fisher Investments, correct, thank you. Fisher gets a ton of money for commissions on putting hundreds of millions of dollars in mutual funds. So it's sad that their people don't work on it, but the company does. Kind of a flawed system again, right? It's funny. They say we make more money when you do. I'm the same way. I get paid on assets under management. As your assets go down, my fees go down. As your assets go up, my fees go up. And I don't do the mutual funds, so Hurley Investments can't get paid commissions for putting tens of millions of dollars, not hundreds, but I can't put tens of millions of dollars in mutual funds. I could put tens of millions of dollars into mutual funds and get a commission on doing so, but I don't. So that's why we don't see mutual funds in people's accounts. All right, are there any other questions? If not, you guys have a wonderful evening. We almost went the full hour. I appreciate you guys being with me. We will get this posted as quickly as possible. And with that said, big crowd here tonight. I appreciate you guys being with me. Have a great week. Next week, I will be in Nevada City, California, helping Lee Maxwell get some house moved. So for those of you that have ever wondered, would a broker come out and help you move from one house to another? 83-year-old, he's had an accident. He's been with me from the start, can no longer drive. I'm taking a couple boys out and we're helping a client move a house, move his stuff from one house to another. So ask your broker if they'll ever will drive, 800 miles to go help someone move stuff from one house to another. You just found someone that will do it. Guys, have a wonderful evening. Look forward to seeing you next Monday night from California. Take care, and I'll talk to you then. Bye-bye.